Hey, good afternoon, everyone. Thank you for coming. My name is John Gemini, Regional VP here at Angel Oak Mortgage Solutions. Today, we're going to do a webinar on our newly launched, enhanced one-year bank statement program. And we'll get started here in about 30 seconds, and then I will introduce our one and only subject matter expert. And we'll get rolling here in about, give us about a minute for everyone to get logged in and get their audio hooked up. This is going to be recorded. We will answer your questions as they come in. We want to keep this as interactive as possible, so please put any questions you have in our question queue and we'll get those answered. If we don't get to all your questions, we will have your account executive reach out to you probably by, I would say maybe by end of day today, but this will be sent out no later than noon tomorrow. So as a shameless plug, next week, February 29th, at the same time, we're going to be doing a second lien deep dive product webinar. So if you don't have it on your calendar, please add that to your calendar. It's quickly becoming a very, very popular program. So without further ado, I will let Scott Grubel, our #1 account executive in the country, introduce himself.
Good afternoon, everybody. Scott Grubel here, account executive down in Broward County, Florida, basically the Fort Lauderdale area for those that are not local. And pretty pumped up to discuss this brand new program we've rolled out, I think with perfect timing to what's going on in the marketplace right now.
Yes, Scott, it's, and I'll show a slide here later, or an Excel spreadsheet here later showing how much, self-employed people are just growing across this country. But today specifically, we're going to talk about the one-year self-employed program enhancement to our core bank statement program. And it's really, I just want to start off, it's really, really important that you stay in touch with your account executive, because we are continuing to enhance programs. It seems like on a weekly basis. So anyway, but before we get into the program, Scott, I want to do let's do a poll question here. So who has originated and closed just a bank statement program in the last 12 months? So while we're doing that, Scott, what are you seeing in the marketplace, Scotty, lately?
Things have been great. We obviously started off a little bit slow in the beginning of the year. I think everybody coming off the holidays, a lot of areas had that extra week off for schools in the beginning of the month. But I've seen, at least here, a pretty steady uptick in activity since then. And business has been pretty consistent since, I would say, the middle of January. A lot of activity. I think there's a lot of activity. I think we're seeing a lot of buyers coming back into the market. I can tell just by the number of scenarios that are coming across my desk and situations, and also by the number of pre-qualifications that have been coming in. So, I think we're seeing an environment here where, wow, and this is interesting. Look at this chart. Yeah. 59%.
So thank you all for voting, and 60% have not. So hopefully today, we're going to talk about that one-year self-employed program, but hopefully today, we give you some tips and tricks on how to find some new customers and how to market yourself differently. This is being recorded. We will get this out to you before end of day tomorrow. But we're going to cover the new enhancement to our bank statement program. We're going to cover pricing, right? How to price these loans, Scott. And then we're also going to cover, how to market, not just the one-year self-employed, but how to market all of our great programs that we have out there. So everything we're doing here today is from our website. And so, Scott, let's talk about the highlights of our bank statement one-year self-employed program.
Okay, so I'm excited about this program because I think this really crosses over. As most on this call know, the bank statement program has been around for a long time, and it's designed for your self-employed borrowers, business owners primarily, and also expands into 1099 and Schedule C. And then we have a bunch of other options available. But the fact of the matter is that for as long as we've had the bank statement program available to business owners and self-employed borrowers, just like conventionally, we have always required that business or that borrower to be self-employed for 2 years. That continues to be the case today on the conventional side. As we all know, self-employed borrowers must be self-employed for 2 years. And to my knowledge, with just about every other non-QM lender in the space, that is still required. Being able to introduce this product, 1 year self-employed, to the marketplace really makes Angel Oak unique in the sense that I believe we are the only non-QM lender in the space offering it. And it opens up the door to so many more opportunities. And we'll go into some live examples. But let's talk about, John, real quick, basically how the 1 year self-employed program works. So the image we have on screen here is our bank statement program, where this is housed under. So you're seeing a FICO of 640 and an LTV of 90%. That applies to standard bank statements. For the 1 year self-employed program, it is a little bit more limited to start out with, but like all of these programs, as we roll them out and as we get them more acclimated in the secondary markets, we start to see guidelines expanding on them. So for today, on your 1 year self-employed, you're looking at a 720 credit score requirement, and you're looking at a max loan to value of 80%, which again, I think is very aggressive. We're able to do purchase, rate and term, and cash out refis for your borrowers that are only self-employed for 1 year. And we're doing these on single families, townhouses, and condos. So it pretty much covers just about any loan that should come across your desk. And the reality of the matter is the majority of the bank statement loans we see as an organization, overwhelming majority, are usually primary residences. So this should fit perfectly right inside of that. So let's go into how the program works. Your borrower needs to be self-employed, a business owner, for at least 1 year. Does not have to be 2, okay? They need to be in the same line of work for 2 years, but the business we're using to qualify that borrower on, the bank statements that we're using to qualify that borrower on, only needs to be open for 1 year. So I can actually go into some real live examples of how this adds value to your business, because I was able to just qualify 2 borrowers yesterday that otherwise would not have qualified in the past for a bank statement program. That loan officer obviously is going to be able to get a loan done for that borrower. The realtor is going to be able to sell that borrower a property, whereas that borrower is being told no everywhere else he went.
Yeah, Scott, I want to highlight what you just said, because I think it's extremely important that, this is a borrower that probably 2 just in the last, day?
Yep, 2.
Yeah. So 2 borrowers in the last day that would not have qualified with previous guidelines on 2 year self-employed or conventionally, right? So we touched on that, Scott, and that's why you're the best of the best. But I mean, that's 2 deals that loan officer or loan officers are getting done that wouldn't have gotten done.
Yeah, those borrowers would not have been able to get a loan anywhere that I'm aware of. And so let's go over the scenario. So scenario was, number 1 was a doctor. Doctor's been practicing for many years, but primarily has been an ER doctor. He's working at the ER, getting paid a W-2. That doctor decided to branch off and open up his own practice about 16 months ago. He wanted to qualify. He's doing very well at the practice. As we all know, they drive a lot of revenue, and he wanted to qualify for a jumbo type property using his business bank statements at his practice, knowing that he had a high amount of deposits coming in. The W-2 by itself was not going to be able to work for that borrower. So really, this borrower did not have many options because that practice has not been open for 2 years. Because it's been open for 16 months, we were able to use the business bank statements for the practice, calculate his income using that business account. And in addition, we were able to still use the W-2 income that he's been receiving and continues to receive because he's still working, doing rounds at the ER. So we took this borrower who was being told no basically everywhere he was going, and we maximized his buying power using his business bank statements in addition to the W-2.
And Scott, that's another great point, because, we see, people with those, we call them the gig economy, right? What you just said with that doctor, working the W-2 job. I didn't even know when we talked earlier that that doctor still had the W-2 job and is still self-employed. So I thought they had just quit and went to the self-employed. So that.
Oh no, yeah, a lot of them will continue to do rounds at the hospitals, right, and they get paid the hospitals pay W-2, but they have their practice. So this was one of those perfect examples, a younger doctor. The second one I think is one that we all probably see a little bit more live today, John, because the doctors, obviously profession, license, etc. But the second one that I was able to qualify yesterday, I was really excited about this one, is so this particular borrower had a W-2 job, but a little bit over 2 years ago, he basically started doing influencer managing and social media content managing on the side. Set up his business, set up a website, was doing everything on the side, but he was filing as a Schedule C up until about 13 months ago. It was just over a year. 13 months ago, once he started seeing that this business was taking off, he was doing really well, he left his W-2 position and he went full-time as a content manager and basically opened up the business. So we were able to get an accountant letter that confirmed, I can confirm this borrower has been filing as a Schedule C and running this business Schedule C, and per my advice, incorporated just over a year ago. Because it's been a year on the business, we were able to use the business bank statements to qualify that borrower. And as anybody knows, from that type of business, content provider and managing on the internet influencers, the deposits were really, really strong. So we were able to get this borrower into a nice price tagged home. That one I was really pumped up about, because I think that's something that we're going to see more real life on a day-to-day business. That's that gig type of economy, gig type of entrepreneur that we're seeing, where people are literally starting these side businesses, leveraging the internet, leveraging social media, and creating these businesses that are driving huge revenue, and they're able to leave their W-2 jobs to go run these businesses.
Yeah, Scott, and that's, what you're saying today, right now, is everyone who's on this call, those are the things you really need to start thinking about. As, don't say no, or don't say, ask those second, third, fourth level questions that will get you to saying yes, because it's, and we talked about it, I was down in Austin, excuse me, I was down in Austin on Tuesday, Scott, and we did a breakout session for a trade show down there. 2023 is in the past, right? You got to stop licking your wounds, right? You got to move forward, and you got to find loans like this, Scott, and that's what's going to make, the NBA is projecting that we're going to have a 21% increase over 2023. Well, I know a lot of you on this call are probably sitting there, that's not good enough for me, right? I want to do more than that. And this is what Scott just explained to you, is how you're going to get a 30, 35, 40% increase over 2023. So that's just great stuff, Scott. We got a couple questions coming in here, but before I get to them, I do want to let everyone know this is being recorded. We will get this out, so we got to be careful what you say, Scott. This is being recorded. We will get this out before end of day tomorrow, and we're going to show you how to price this 1-year self-employed program, and we're going to show you how to market to these borrowers. And Stephen's first question here, and I'll answer this one, Scotty, is do we have the 1-year self-employed marketing flyer up there? And Stephen's a former, well, he's still a customer, but I've worked with Stephen in the past. So Stephen, thank you for being on here, and great question. And our marketing is on this call too, so they'll work a lot faster to get that marketing flyer done for you, Stephen. So thank you for asking that question. So Scotty, what's the max LTV? I know you went over that earlier. Just give us what the max LTV and the score required, please.
Yep, max LTV currently is 80%, and the minimum credit score currently is 720. But as you know, anybody that's experienced with working with, not only Angelo, but just in the non-QM space, as you guys understand, when these newer programs get rolled out, they get introduced to the marketplace at a certain level. And as the secondary markets get a little bit more comfortable with these programs, we start to see those guidelines expand. So in the future, I would see as volume picks up for these programs, credit score requirements will probably drop, and hopefully loan to values will expand a little more.
Yeah, so Renee, hopefully that answers your question. Thank you for asking it. Scott, do we use business or personal bank statements for the 1 year self-employed? Excuse me.
It's going to be business bank statements for now. So we're looking at primarily business owners. But again, I emphasize the for now because as in my previous statement, I could easily see as this program expands, we'll start to be able to incorporate those 1099 borrowers, some of those Schedule C borrowers. Now, 1099 would probably be the one that I think would be the most likely to get added because those are the ones we could really verify. How long have you been in the same line of work and have you been licensed? Have you been getting a 1099 for at least a year? Schedule C, it's a little bit more difficult to do. So we'll see as it comes forward.
Yeah, Scott, great answer. And you're 100% right. These are not government-backed money. This is private money. And, results expand guidelines. So, and performance expand guidelines. Scott, so, we've talked about bank statements for so long, you and me and everyone here at Angelo. How's that income calculated? And, just kind of go over that. I know we use just business bank statements, but go into a little depth on that, please.
Income is going to be calculated on the 1 year self-employed program exactly the same as it's calculated for our standard bank statement program. So we're going to take your total deposits on your bank statements and we're going to apply an applicable expense ratio to that business. Now, when we run numbers, we use a default of 50%. So just throwing out round numbers, we get 12 months of bank statements, we have 2 million in deposits, we apply a 50% expense ratio. That leaves us $1 million to divide by 12 and come up with a monthly income number. However, we realize that there are many businesses, and we can use my influencer content manager as a perfect example, many businesses that are operating from home, that don't have any inventory, don't have any overhead, don't have any employees, and those businesses operate at much lower expense ratios. So for those businesses, we can actually go down to a 15% expense ratio, meaning we can use 85% of the total deposits. So again, we're going to look at it as business by business. That's the purpose of our business questionnaire. Those of you that are familiar with that, you guys know we send you a business questionnaire for the borrower to complete. That's going to tell us how many locations do they have, how many employees do they have. We ask them what their expense ratio is, and that gives us our guide. But again, the default number we use is 50%. I forget what the number is, John, but there's a statistic we have of how many of them actually work at 50%. It's the overwhelming majority.
I want to say it's like 75 or 80% qualified. Yeah. 50%, yeah.
And it makes it easier because we can just, move forward. But for those that need the higher expense ratio, for those businesses, I should say, that operate at a lower expense ratio, we do have the ability to get down to 15% expenses on those.
Yeah, so Scott, Hannah's asking a question, great question. We'll show you how to submit a pre-qual, but kind of cover a little bit the pre-qual process. What does it look like,
Absolutely. So we're going to go into how you price one and submit one, as John mentioned. And the beauty of our system is that literally when you guys hit that submit button, that pre-qualification comes into us, the account executive. We get an email notification that your pre-qualification was submitted, and it immediately goes into our open pre-qualification queue. At that point, we submit the income to be calculated by our bank statement review team, and usually same day or within 24 hours, your account executive will get back to you with a full written pre-qualification or maybe a phone call to discuss some things and get things worked out to structure the loan property and ensure that it's going to get through submission and get approved.
Yeah, and I think everyone on this call can tell, the professional and the expertise that Scott has, but all of our account executives across the country, right? So Scott, Otto's asking here, what do we look for I'm going to generalize this question, but what do we look for consistency of deposits?
So that's a great question.
Yeah.
We do want to see consistency of deposits when we're looking at bank statements. And specifically on this for 1 year self-employed, because we're looking at a business that's newer, we definitely want to see that that business has consistent deposits month over month. And usually in the two that I looked at yesterday, those deposits were actually increasing. So it was clear that these were two new businesses that were beginning to build and take off. However, on your standard bank statement loan for a borrower that has been self-employed for 2 years, we offer options, because the reality is there are a lot of businesses that are seasonal, so the deposits are not consistent. I like to use the example of a realtor. We have some realtors that.
It's actually Otto's question. That's Otto's question. Exactly.
There you go. So I see these all the time. I probably close 3 or 4 loans for realtors a month. It's a big part of what we do under the business bank statement, under the bank statement program, I should say. So what we do is you have those realtors that have one good month followed by one bad month, maybe 2 good months, then another bad month. And so because we don't like to see that inconsistency, we introduced the 1099 only option, and we introduced the profit and loss option. The 1099 option really was born of realtors who have that exact situation, because now we can eliminate the bank statements and we can just look at the full picture. What was last year's 1099, right? And then in addition to that, we're going to ask for an income statement from their agent, letting us know that their year-to-date income is still consistent and it's not declining. And then we're just going to take the total of that 1099 and apply, for realtors, usually a 15% expense ratio. So we're taking 85% of that total and averaging it out over the 12 months to come up with our income figure. So that's literally how the 1099 program was born. And then the P&L only program really is the same theory applied to a business, because what we encountered over the years is that we had a lot of business owners who maybe had multiple bank accounts, or in some cases they would deposit half of their revenue into their personal account, half of their revenue into the business account. Everybody operates their business differently, right? And so sometimes that became difficult to qualify that borrower under a bank statement program. So hence the P&L only program. Now we can just get a profit and loss statement, look at the entire year, see what the true expenses were, not what was reported to the IRS, the true expenses for that business, and then we can use that net income to qualify that borrower.
You're on fire today, Scotty. You answered Marina's question and Otto's question in one fell swoop. And then I'll answer Dylan's question. I'll give you a break for a minute, Scotty. Dylan, the difference between our 80% and 90% program, 90% LTV, excuse me, we're going to require that borrower be self-employed for 24 months. So that's the difference between qualifying for the 1 year self-employed program or the 2 year self-employed program. But I also want to be clear here, on our 2 year self-employed program, like Scott was mentioning, maybe more of a seasonal job, get the 24 months for us. I know we're specifically talking about the 1 year, but if we are doing the 2 year self-employed, get the 24 months up front. Scott or any of our AEs across the country, they'll tell you which way is the best way to go, whether it's to go 12 or 24 months. Like, for example, Scott mentioned that influencer earlier. Their income was going up. Well, we might not want to see months 13 through 24. We're only going to want to see the latest 12 months. And that's going to give them more income to qualify. And we've always said this, Scott, we haven't said it yet, shame on me, but we can increase borrowers' purchasing power 2, 3, 4, 5 times if they're not using their tax returns by going self-employed. And this is truly, this is our biggest program in bank statements for self-employed borrowers, right? It's 60+% of our business, and it is the most underserved borrower out there, because everyone's been brainwashed to use tax returns. We've been doing this over 10 years, and it's amazing. We still have 60% of you on here, which is great. Thank you for being on here. 60% have not originated a bank statement loan in the last 12 months. So hopefully we're giving you, sorry, Scotty, go ahead.
To your point, John, and what I like to do is with my originators is I always tell them, let's start with the bank statements first, right? And then we'll cascade down from there, because the bank statements is the easiest way to qualify the buyer and get them done. And we're experts at it. So I can take a look at 24 business or personal bank statements, and I can know pretty quickly what our income is. If for some reason that's not working, I'm going to be the first one to contact my LO and say, hey, this borrower, we need to pivot to the 1099, or we need to pivot to the P&L. But we start with the bank statements and then we work our way down from there.
Yeah, and today we're focused on, bank statement, really, 1 year self-employed bank statement. But John's asking a question. John's asking a question here, Scott, about can we use a 1 year tax return? Full doc.
We can. As a matter of fact, since we're kind of on the 1 year self-employed tax, we can use a 1 year tax return on the full doc side, and we only require that borrower to be self-employed for 2 years, whereas conventionally they need 5. So that's definitely another niche that you guys can go out there and market to your self-employed borrowers.
Yeah, I think we just helped David because 2022 wasn't that good for his borrower, I guess. So David, hopefully, the 1 year. And again, so we're in 2024. Just refresh everyone. Everyone wants to forget about 2023, but we're in 2024. So David, if that borrower had a really good 2023, let's just go 12 months bank statements, and they could qualify for that 90%. And I know we're throwing a lot of different LTVs: 1 year self-employed, 2 year self-employed. We're jumping back and forth, and I apologize a little bit. That's my fault. I'm supposed to keep this on the straight and narrow, but
we'll get it back on track.
Let's get back on track here. So, but David, yeah, Scotty.
Sorry, John. And I was going to say, I think that really speaks to what's the opportunity, right? And the idea is for going into the new year. 2023 is behind us, as you said, John. There's a lot of originators that are having a lot of success already in this market. And it's really, how do you separate yourself from everybody else? And it's being able to offer products and programs that maybe the next LO is not aware of or does not have the ability to offer. So if you're offering a 1 year self-employed bank statement program, businesses that have only been open for 1 year, nobody else is doing that. You're offering a 1 year tax return program for a borrower that's only been self-employed for 2 years. Nobody else is doing that. These are the niches that you can offer to this community. And the opportunity is huge. And I know, John, you have some information you're going to share that kind of quantifies it and puts it in numbers. But guys, just look at the doctor I was referring to. So, and to get a little bit more dialed in on that scenario, we're talking about a doctor that could not get a loan anywhere, could not get a loan anywhere. And I should say, for the price of the property he was looking at, the property was over $2 million. The loan amount was over $1 million. And so he could not qualify with just the W-2 income. There is no way that borrower was going to be able to buy that house if we were not able to use the bank statements for that practice that was open for 16 months. And then we combined it with that W-2 income, and we took his buying power to another level. That borrower is being told no. So how does that loan officer look to that borrower? How does that loan officer look to that realtor and that entire office where that realtor works? He is the savior. He is the hero. And got news for you. That doctor probably knows a lot of other people in the same exact situation who are probably going to get referred to that originator.
Yeah, Scotty, we call it the sphere of influence, right? How, like you said, self-employed people know self-employed people, right? They run in packs, and that doctor, is working with a bunch of other doctors that are seeing that doctor's success and saying, I'm going to open up my practice and I want to buy a house. And everyone knows the quickest way to accumulate wealth in this country is through real estate. And, so anyway, so I just want to make sure we're clear, Scott, here, because I know we've touched a little bit on our 2 year self-employed. So the max LTV, again, for our 1 year self-employed is
80% for now. Stay tuned.
So everyone knows this is being recorded. You know, you can go through this, and we will get this out to everyone before end of day tomorrow. So just want to make sure we're answering all your questions. And if we don't get to a lot of these questions, or there's been the lines have been blurred between the 2-year and the 1 year, you know, your account executive will get in touch with you. They'll go through your scenario and down to the details. So
let's recap. 1 year self-employed program, 720 credit score, 80% LTV. That's the way the program stands today. We do expect that to expand. And, you know, as I mentioned just a minute ago, those borrowers don't really have any other options. So typically they're going to work with you to try to make it work. I do think it's important to note that statistics show, John, we always like to talk about this, our average bank statement loan since the inception of our company averages at an LTV of about 70 some odd %, right? So
yeah, Scott, it's like 73%, and their average credit score, and these are not like people trying to push together, you know, bank statements. Their average credit score is about a 744, Scott. These
right.
are sharp people who really, they got their stuff together, man. Whether they're W-2 right now and doing that side hustle, like you said, Scott, it's just, there's so many people out there right now doing this. And if you're not marketing yourself to that, you're really missing a big opportunity. So I think we've gotten through most of this, the questions here, Scotty. Anything else you want to talk about? Because then we'll go into, you know, our quick quote, and then I'll bring up some stats for people to really, and these are U.S. Census stats. These are not John Gemini make up numbers stats. They're actually the U.S. Census Bureau. So these are stats we're going to share with you, and it is recorded. So this will be part of the recording that gets sent out to you. So, and if you like, I'll share my email address at the end. I can send this to you. I've started breaking it down actually by state. We were talking a little earlier. So Scotty is at an advantage because I think 12% of the new businesses started are actually in Florida. So, which kudos to you. Anyway, Scott, let's go back to our homepage, Scott, here, and let's do a pricing scenario and show everyone here. And everything we're doing here is from our website today, which is really easy to navigate, easy to use. We have all these icons up here, links to get to the other parts of the website. We're only going to talk about our non-QM quick quote and our marketing portal today, but there's a lot of other great resources out here. So let's go, Scotty. Let's talk about a quick quote here.
So non-QM quick quote, this is our online pricing engine. The first thing that you guys will notice as we went in here is that credentials are not required. You do not need to have credentials. Anybody could go to our homepage, click on that link, and open up our website, open up our pricing engine. In my opinion, I think it's the easiest pricing engine to use in the non-QM space because you're literally just going down your list of drop downs here. And as you start inputting your information, you're going to see pricing pop up at the bottom, very user friendly. So this is a first lien. We're going to start to go ahead and input the loan amount, the credit score. Those of you that have used this before, you guys will see this is pretty much identical to how you would price a standard bank statement program, with the exception of one new drop down that was added. So as John goes down here, he'll continue to answer these questions. Income documentation section there is going to be the 12 months bank statements. There we go. And then you see the new button that just opened up right beneath it. Is this borrower self-employed greater than 2 years or a year to 2 years? Obviously for this program, we're going to select the year to 2 years. We've got an owner-occupied property, 30-day lock quote, borrower paid, and there's your pricing. 7.5%, 80% LTV on that particular scenario that John just entered. So as you can see, is literally just that one extra drop down. Guys, you see how easy that was and how simple that was? Again, you know, I've seen a lot of pricing engines out there. This is work down the order, top to bottom, put in your information, boom, pricing is at the bottom. John can click that view rates button now, and he can see.
Scott, before we go there, I do want to, 2 things. You know, this also will show you some, or display some additional, because we really didn't talk about seasoning from bankruptcies or foreclosures, Scotty, right? So we only require for this 1 year self-employed, 24. So,
Yeah.
and we have an account executive on the west coast of Florida, Jerry, and he says it's so easy to use this pricing engine. His 8-year-old daughter runs scenarios on this, so it's just it's really, really easy to use. And now I'll click on the view rates here, Scott.
Yeah, so you click on view rates and this gives you your full pricing stack. So now you can see what is the par rate, what, you know, if you wanted to issue a little bit of a credit to your borrower. So in this particular case, a 7.5 is paying a credit of $937.50. Maybe your borrower wants to go 7.375, pay $937.50 out of pocket to get that rate. Or, you know, maybe you're going borrower paid 2 points and you want to get them a 1 point lender credit. You might look at that 7.99. But here's your pricing stack. Here's your options. If you decided to move forward with that rate that John selected, you'd click on the select option. That takes you to step number 2. Towards the top here on step number 2, you have the ability to upload a 3.4 file if you have it buttoned up. If you do, please do. If you don't, just click the next button. And then in step number 3, you're going to enter your account executive's name at the top. And then after that, you're going to put in all of your personal information, company, your name, your NMLS ID, phone, email, borrower's name. Down here in these boxes at the bottom, you can literally drag and drop all of your documents, and you can highlight up to 24 bank statements in one drag, drop them into the bucket down at the bottom there for the bank statements after you've added your 1003 and credit. And you'll see at the very bottom, there is a submit button. You can hit the submit button. That will push this pre-qualification through directly to your account executive. As I mentioned, we get a notification via email and it goes into our queue immediately. We would then submit the income to be calculated officially, and usually same day, if not within 24 hours, you have that full pre-approval on your desk.
Yeah, Scott, you know, Alex is asking what other documentation do we need? We just need the 12 months of bank statements along with the 1003 and the credit report. It's that easy. And you know, our expert AEs are basically pre-underwriting that file. And, you know, they're looking at credit, they're looking at the 1003, and it helps, believe me, it helps a lot to do a complete 1003. And then just the bank statements. And we have a team of experts that's going to calculate that income for you. That's all they do all day is calculate bank statements. And that's the income that's going to be used throughout the underwriting process. So, and Scott, you know, the question hasn't been asked, but I'll ask because I'm sure there's someone out there thinking about it. Do you do a pre-qual on a TBD?
Absolutely. To do a pre-qual / pre-approval, we do not need a property address. TBDs, I mean, quite frankly, that's the majority of what we do. Because your buyer on a bank statement program, your buyer needs to know what their buying power is. They don't know, right? Because you're not using the tax returns. You're relying on us to tell you, here's how much income we have to work with. Here's how much your borrower's buying power is. So absolutely, TBD is not a problem. That allows you to get that information over to us, and we're issuing that pre-approval. And guys, I like to always put it in conventional terms, since that's what most people are familiar with. Our pre-approval, when we send that back to you, is your version of a DU or an LP, approved, eligible, accept, right? That's what our pre-approval is. It says right at the top, approved, eligible. That is basically the equivalent to what you would get on the conventional side.
Yeah, and Ryan, yes, we do require a credit report and a 1003 to calculate that income for you for that pre-approval. But, you know, I kind of like, this is where I do my public service announcement here, Scott. If you know ahead of time you are going to meet with a self-employed borrower, you know, now everyone should be asking themselves, well, are they self-employed for 1 year? Are they self-employed for 2 years? Okay, give me your tax returns. But, and everyone hates going back to that borrower, right? Or that buyer and asking for additional stuff. You found out they didn't qualify. Well, now you're going to go back to them and get their base. Why not get their bank statements the same time you're getting their tax returns? Go down the DULP route if that's the route you want to go, and then submit your bank statements to Scott or the other account executives across the country. It doesn't cost you anything to get that income calculated. It's going to cost you maybe 24 hours. That's all it's going to take.
I'll take that a step further. That should be industry standard, right? To me, if in today's day and age, if you're an originator and you know you have a self-employed borrower, it should be, 101 when you're taking that initial interview. Here's the docs that I need. I need your tax returns and I need your last 24 months of your bank statements, because now you as an originator have all the tools to properly guide that borrower in the right direction. If the income on the tax returns works, great, go conventional, get that borrower done. If it doesn't, because there's a ton of write-offs and the net, adjusted gross income is extremely low, you have the bank statements in hand. Send them over to your Angel Oak account executive. We'll run those numbers for you, and you know what you have to work with.
Yeah, and Scott, it's a shame because it doesn't, because how many, I don't know what the percentage, you would probably know better than I would, but what percentage of like, oh my God, everyone's hair's on fire. They told me they made this, I got their tax returns, right? And now they don't make this, they don't qualify. Now I got to go back and get their income. And now you're potentially putting a referral relationship on the line, not just from the buyer, but the realtor also. So, it's, you said it well, Scotty, it should be 101. Grab the bank statements and the tax returns at the same time. And you're going to see, we all get paid on the volume, and right, the loan amount. So you're going to see a bigger loan amounts, as we mentioned, 2, 3, 4, 5 times bigger, using. Yeah.
100%. Yeah, 100%.
So Scott, that goes directly to the AE, as you mentioned. The income gets calculated within 24 hours. You produce your pre-qual to them, and then that borrower is out there shopping, hopefully, for a bigger, better. Because we always say it's not W-2 people. Well, now it's a hybrid, right? It's not W-2 people buying those luxury homes. It's the self-employed influencers, doctors starting their own practices. So I love it. 2 real world experiences that you gave earlier today, Scott, that just really tell what this economy is coming to, right?
Those are live scenarios that the influencer got registered for disclosures today. That loan's in and ready to go. That borrower made his offer and got accepted yesterday. So
that's awesome. I love that. So Scott, I'm going to try to share my screen here. Because we talked about numbers, Scott, and I want people to see this. Scott, tell me if you can see this.
Yep, there it is. That's what we're referring to.
Yeah, so guys, these are real numbers. These are not John, Jim, and I made up numbers, right? So these are self-employed borrowers with new business applications that have been formed over the last 20 years. And you can see the biggest increase was in 2005, but that's because they weren't counting prior to that. So this is a stat that they just started counting. So their 2023 had almost 5.5 million new businesses created. And you can see since the pandemic, since 2020, look at how these numbers have grown. Over 20 million new businesses have been created since the pandemic. These are real numbers and there's the source, U.S. Census Bureau. I'm not making these up. These are real numbers. So I just wanted to share that with everyone. It will be part of the video, the recording that goes out to everyone before end of day tomorrow. So
that is the opportunity. That is the opportunity right there.
And Scott, it's not changing. It's not getting smaller. You saw those numbers. They're just increasing, and so many more people who are tired of being that W-2 person and unappreciated, or potentially getting, work reductions. They're starting their side gigs and their side hustles. So
yeah, listen, this age of internet, social media has just opened up the door to so many different entrepreneurial opportunities for so many different individuals. The example I used with the borrower I had yesterday is a perfect example of a business that may not have existed, 7, 8, 9 years ago. And so these businesses are forming. More and more people are going out on their own. And as we have always said, they are underserved when it comes to having the opportunity to be able to access financing to purchase a home.
Yeah, Scott, and that's on our website. It's funny. That's we're really using that a lot lately, but they are underserved borrowers. So let's talk about an underutilized portal. And I'm going to log in here, Scotty. So give me a minute.
Yep. So this is important as we go into the marketing portal. I really think everybody on this call should definitely bookmark this or make note of this little segment here. Obviously, you need to have credentials to access the portal. You don't need them for the pricing engine, but for this you do. You can get with your account executive to get yourself set up with credentials. If you're not an approved broker with Angel Oak, reach out to one of us and we'll get you set up and get you approved so you can get credentials. But once you're here, you have access to our marketing portal. And when you enter the marketing portal, John will show, you have access to basically every tool you will need to market these products and programs, starting with the flyers. Every program we offer has a flyer that you can utilize to market it. So you'll notice there, 2 of our newer programs, if you scroll back the other way a little bit, John, the closed-end second and the HELOC, the bank statement HELOC, have flyers already. 1 Year Self-Employed just rolled out, so we hope the marketing team has that flyer up there here very soon. You guys can check in for that. And you'll be able to, put this flyer together. As you can see, it's 100% customizable. Your company logo gets slapped on the top left-hand corner, your picture, contact information, all down at the bottom. And you can utilize these for blast emailing to your referral sources. You can utilize them as a drop-in to go visit a referral source. I mean, you could just, go out and hand them out to every business you see out in the street. But it's a great way to market. In addition to that, if you go back over to the marketing portal, John, in the drop-down, we offer you everything you need to post and market these programs on social media. So if you wanted to drop a quick Instagram post, you can come in here. You'll see every one of our programs has an image that you can utilize as well as some verbiage, or you can just put your own verbiage and just kind of make it easy and copy paste our image and slap it on there and put up a quick post geared towards realtors or geared towards borrowers. So you have those tools available for you there.
Yeah, I would challenge, anyone on this call to do this, right? We don't have the 1 year out there yet, but there's nothing that says you can't change, any of this verbiage here to inform your people on Instagram, LinkedIn, whatever, Pinterest, Facebook. I challenge anyone to do that. We have an account executive out west. He says, how do you find a self-employed borrower? He says, open up your front door, you will trip over them, right? And we showed you those numbers. Just last year, almost 5.5 million new businesses were formed. So anyone who started a business in January of 2023 is eligible for this 1 year self-employed program. So
yeah, actually, a little side note I would add to that. We're coming up on tax season here, John. I think anybody on this call, it's just a simple go and do your taxes. You're having a conversation with your accountant anyway. You let them know, hey, by the way, if you do taxes for any self-employed customers, self-employed clients, I have this new program available where if their business is open just 1 year, I can qualify them for the purchase of a home or refinance of a home. So 100%. I mean, CPAs are one of the best referral sources for bank statement loans.
I'm sorry, Scott, I was scrolling around. I was missing it. Yeah, everyone in the next 60 days, taxes are due. And, so we showed this flyer for the bank statement HELOC. This gentleman, Mark Jones here, this is a live website.
Oh, so that's a live flyer. Mm-hmm.
Yeah, that's the CPA flyer. And when Mark filled this out, it fills out all his content that he fills out, his personal content he fills out on the one flyer populates for all the flyers. So why wouldn't Mark just take this to his CPA in the next 60 days and, hey, I could, close loans for, anyone you do taxes for that's self-employed.
Extremely user-friendly.
Yep. And then Scotty, probably the biggest and best presentation is the realtor presentation.
100%. So we offer a PowerPoint video here in the marketing portal that allows you as an originator to present these products and programs to anybody you want to, whether it's a room of realtors or a room of borrowers. Not only do we offer you an actual PowerPoint deck that's already made for you, but we have a flyer that helps you promote the event. So you can put your flyer together, set a date for the event, location, etc., start emailing it out 60, 90 days in advance, do a drip campaign to get it in front of as many people as you can to RSVP to this event. When they get to the event, you already have the materials to do the presentation. This PowerPoint presentation is 100% customizable. You literally can customize your company colors, your company logo, your contact information on every single page. And just because it's a non-QM presentation does not mean you cannot add slides to it. So if you wanted to drop a note in there about, down payment assistance program you're offering or whatever the case may be, you can do that to be able to present on a wide range of products and programs. So I don't know why this is not utilized more. I use the example of one of my clients personally that did that, invested the time into customizing this thing 100%, came out beautifully. They emailed it out to every originator within the company, and I've probably done 15 to 20 presentations for that company using that deck, where we've gone out together and loaded up a room of realtors and presented these products and programs to.
Yeah, Scott, we talked about, you talk about a 1099 realtor autos scenario, and 9% of the loans Angel Oak closes on our self-employed programs, right, are realtor. 9% are realtors. So do the math. You get 12 or 15 in a room, you're going to get one of their loans.
That's a fact.
And it's a fact. It is a fact. I've seen it. And Scott, it's like you said, a lot of people don't take advantage of this. I am seeing an uptick. I have seen an uptick in the last 60 to 90 days of people taking us up on this offer, because if you don't feel comfortable presenting this content or feel like as much as, say, Scott or any of our other account executives across the country, they will go out and present on your behalf. They don't say anything about Angel Oak or Scott Grubel. Otto's asked a couple questions here. If Scott goes out and presents on Otto's behalf, he's going to just say, we're just one of Otto's investors. That's it. And then they're going to go through all the great programs that non-QM can help those realtors, because whether we like it or not, realtors pre-screen these buyers, right? They say, well, what do you make a year? Well, you should look for this. Well, Otto's going to get back in there and say, hey, let's get their bank statements.
And let's put it in perspective, John, because I love to do realtor presentations for this reason. Let's face it, I don't have a job, you don't have a job. Every originator on this call does not have a job if it's not for the realtors, right? The realtors are on the front lines. They are day one with the borrower, and they get them into contracts, and hence they need to submit those loans over to us to get those loans done. So it is so important, so valuable. Cannot emphasize how important it is that at the realtor level, they understand the options and the products and the programs that are available to be able to sell more homes to more buyers. And that's really why I love presenting these products and programs. We see, statistics like the poll we did here where 60% had not closed a bank statement loan. Take that to the realtor level. I mean, every single time we do a realtor presentation, I did one yesterday, as a matter of fact, and, bulbs going off. A lot of realtors are not even familiar with these products and programs. So what a way for an originator to get a bunch of realtors in a room to be able to capture that audience and present to them.
Yeah, Scott, well said. Like you said, 60%, 59% have not originated. Now, I don't know if that means they didn't know about non-QM programs or know the influence that it can have on their business, but if you extrapolated that out to the realtor world, I would say it's probably 90% don't know about these programs. So, but anyway, yeah. So we're into this. What time? It's almost the hour's up, Scott. But anything else, Scott, in closing? That it's flown by, man. I love visiting with you, and I love hopefully there's optimism in the market, and hopefully you feel that after today being on this webinar, that there are ways to grow your business, and your AE out there in the trenches with you from Angel Oak will help you do it and in the most professional manner. I mean, Scott, you see how Scott presents. A lot of our account executives across the country can do this for you. But anything in closing, Scott?
No, I would close with that is that, look, what we're seeing is we're in an environment where we all know interest rates are slowly but surely declining, and we all expect that at some point later this year, that decline will pick up its pace a little bit, right? But we've already started to see it come down. That is a stark contrast to what we saw in 2023. In addition, with that decline in interest rates we're also seeing products and programs begin to grow and guidelines beginning to expand. So let's just look at the data and look at the information of what's happening. And you can clearly see when you look at those factors that we're positioning ourselves to be able to capture more business going into this year. So I'm really excited about the outlook. Products like a one-year self-employed bank statement program, closed-end seconds on the bank statement side, HELOCs, DSCR expansions to 85 LTV and so on, and all these things that we're doing are putting us in a position to have more options to place more buyers into homes and to be able to close more loans. So I'm really optimistic. I think it's the perfect time for education right now at the loan officer level, at the realtor level, to spread the word about these products and programs so we lay the foundation and have everything in place to maximize the back end of this year.
Yeah, Scott, very well said. And we're going into buying season, right? This is buying season. So why not, educate and inform your referral sources out there on the programs that you have available to them. And it's just, part of me gets crazy, the other part gets, all geeked up about it. But we're waiting for you to unleash us on your sphere of influence, basically, right? That's it. And let us help you educate everyone out there. I was down in Austin on Tuesday, and a lady down there, I did an example. Just think of different ways to market yourself. And all of our account executives have this intel in their head. Just let them share it with you. She was on a debt service coverage ratio webinar. Sorry, 2 weeks ago, she was on a debt service coverage ratio webinar on there, and she belongs to a real estate investing group, and she had never heard about the debt service coverage ratio program. Next time she goes to that group meeting, right, what is she going to talk about? Look what I found.
Yep.
So anyway, top of the hour, I know we got to go. Scott, as always, I appreciate you. Love working with you. Honored to work with you. And for everyone on this call, thank you for being with us today. For those of you who have closed loans with Angelope, thank you. For those of you who have not, give us a chance. And more importantly, let us help educate your group, your referral group on these programs for you. So have a great afternoon, a happy end of the month, and a great 2024.
Thank you, everyone, for joining.
Thanks.